we did talk about this ahead of the merge. A whole bunch of different services are going to be pausing Ethereum services. And one is going to be Aave. The DeFi giant Aave is going to stop loaning Ethereum ahead of the Ethereum merge. So you need to be careful. The Aave community is worried that users may increasingly borrow Ether ahead of the merge, exposing the protocol to liquidity issues and injecting volatility into Lido's staked Ethereum market. Aave, a big decentralized lending protocol, invoked new rules to protect itself from several risks that could stem from a surge in borrowing demand for Ethereum from crypto traders betting on Ethereum's blockchain's upcoming technological overhaul. Now, why is this important and why do these two things relate? Well, if you actually dig into what people are saying around the ETH work drop, basically the one-to-one drop, and you start to see what they're encouraging. They are encouraging people to take Ethereum loans out on platforms like Aave, hold it in their wallet so they get the one-to-one, pay the loan back after the merge, and then get the additional tokens of ETH and go sell those on Polo Nex. This is a strategy that's being advertised everywhere right now, and it does mean that you do end up possibly having, some services being compromised like Aave. So I'm not saying this is directly why Aave made this decision, but there is obviously potential here for it being directly related. Between August 30th and September 2nd, the Aave community overwhelmingly voted to stop loaning Ethereum or Ether, setting aside democratized finance's free market principle to mitigate protocol-wide risks that may arise from Ethereum's upcoming transition from the proof-of-work consensus mechanism to the proof-of-stake consensus mechanism. Dubbed the merge, the upgrade is slated to happen between September 13th and 15th. Ahead of the merge, the Aave protocol faces the risk of high utilization in the Ethereum market. Temporarily pausing ETH borrowing will mitigate the risk of high utilization, the proposal highlighted by research firm Block Analytica said. The utilization rate refers to the percentage of the pool loaned out. The rate will likely rise as users could borrow ETH before the merge to receive free money for the potential Ethereum fork token ETH proof of work. So yes, that's exactly what they're worried about. Some Ethereum miners are contesting the planned transition to proof of stake and looking to split the chain into a proof of stake and proof of work chain. The latter will have an ETH proof of work as its native token, which will be distributed to ETH holders for free. According to Ian Unsworth, a researcher at Binance.us, users are borrowing ETH from lending protocols, specifically Aave. If the trend continues, the already elevated utilization rate of over 70% could jump to 100% as CoinGecko's Bobby Ong anticipates. A spike in the utilization rate would mean most Ethereum most ETH has been loaned out, leaving little for liquidations as collateral to process regular liquidations of ETH borrow-based positions. High utilization interferes with liquidation transactions, thus increasing the chances of insolvency for the protocol, Block Analytica said in the proposal. While calling the borrowing suspension a good move, Ian Solot, a partner at crypto hedge fund Tagus Capital, said the part of the problem is that if markets become very volatile and ETH borrowers need to be liquidated, there may be a scarcity of ETH due to high utilization, making it harder for liquidations to go through effectively. Liquidations are forced closure of positions due to a decline in the value of the collateral. Aave describes liquidations as a process that occurs when a borrower's health factor goes below 1 due to their collateral collateral value not covering their loan and debt value. The bump in utilization rate could lift Ether borrowing rates to levels where the popular ETH and staked ETH recursive borrowing positions on Aave become unprofitable. That in turn could lead to the mass unwinding of positions, injecting volatility into the ST-ETH market. In recursive trades, users deposit ETH into liquid staking protocol Lido in return for their staked Ethereum token. which is then deposited as collateral on Aave to borrow more ETH. This borrowed ETH is again moved to Lido for more ST ETH, which is again deposited as collateral on Aave to borrow ETH. The cycle continues. This leveraged position analogs to carry trading losses appeal once the ETH borrowing rates rise above the annualized staking rewards, currently at 3.9% on Lido. Once the ETH borrow rate reaches 5%, which happens shortly after 70% utilization rate, the ST ETH positions start becoming unprofitable. Risk research and analysis team Block Analytica said in the Aave ETH proof of work risk mitigation plan published last month. This means that we would see a lot of ST ETH to ETH redemptions and in turn a downward push on the ST ETH price, which will already be under pressure due to regular ST ETH holders switching to ETH to gain upside on ETH proof of work fork. All of this can lead to a downward price in the spiral of ST ETH, which can create cascading liquidations at Aave, Block Analytica added. The largest ETH borrower and two second largest ETH borrowers on Aave have ST ETH as collateral. According to data between Binance.US Unsworth, at press time, more than $900 million worth of ST ETH is locked on Aave as collateral for borrowing ETH. Aave also faces the risk of wrapped Ether, WETH, liquidity providers withdrawing coins to position for a potential Ethereum fork token ETH proof of work. And this is what I was talking about. See, Aave isn't going to be in trouble because Aave is dependent on the liquidity providers, but the liquidity providers will not get their ETH proof of work tokens if they are currently wrapped. So they have to unwrap the ETH, which means that they pull out of liquidity. And if they pull out of liquidity, Aave is in trouble because they aren't able to actually do the swaps that are needed. Some community members are unsure whether suspending ETH borrowing would help address the potential problem or not. So there you go, guys. This is turning out to be a super interesting time within Ethereum, and we're going to have to sit back, relax, chill, and sip our coffees and see what happens because obviously I do not know what's about to happen, but it's about to be pretty exciting, I'm pretty sure. And it's all going to surround Ethereum, right? And then eventually we'll start to see our nice little proof of work coins pump up. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.